Why use a commercial mortgage broker? Commercial real estate investors and owners almost always eventually need bank financing for their portfolio. And when the time comes, whether refinancing or purchasing, borrowers have a choice as to how they're going to go about sourcing that financing. The borrower can choose to shop around for a loan themselves by going directly to each of the banks and that lends on their type of properties in their portfolio, or they can engage a commercial mortgage broker to help. Having done both, I can tell you that there are many benefits to having a commercial mortgage broker on your team. So let's talk about what a commercial mortgage broker does and the role that they play in the lending process. A commercial mortgage broker, most importantly, is different than a mortgage banker. A mortgage banker is a loan officer who works for the bank, and their job is to originate loans that fit into their bank's portfolio. A mortgage broker is an independent professional who works for the borrower, not for the bank, and they specialize in helping the borrower work with the mortgage bankers by doing four things. First, they help the borrower shop around all of the mortgage banks for the most competitive loan programs in the market for their particular property. Second, they help the borrower analyze and compare the advantages and disadvantages of different loan quotes from competing lenders. Third, they help the borrower compile and prepare a complete loan proposal package for the underwriter. And finally, they help facilitate and manage the loan process on behalf of the borrower all the way up until closing and funding of the loan. So here's some things to consider when deciding whether or not to use a commercial mortgage broker. The first important thing to know is that there is usually no additional cost to use a commercial mortgage broker. That's right, the borrower does not typically pay an extra fee to use a broker. Most lenders will waive or reduce their origination fees so that the broker can collect that fee instead. So the borrower gets the advantage of having someone representing their interests instead of the bank's interests, and it's typically at no additional cost to the borrower. The next thing to consider is market knowledge or expertise. A good broker typically deals with a wide array of local and national lenders every day, including mortgage banks, commercial banks, HUD lenders, investment banks, insurance companies, pension funds, credit unions, hedge funds, agency lenders, government agencies, and private lenders. The next thing to consider is certainty of execution. Because a typical commercial mortgage broker has familiarity with the process that each lender prefers and the best way to prepare a loan submission package for each particular lender. Typical lender sees far more requests than they can possibly review and approve. A good commercial mortgage broker knows how to prepare a loan request package that'll be given the best consideration and quick response by the lenders. And they typically know what information is key to obtaining loan approval from a lender. Another thing to consider is the analysis and consulting that you get when utilizing someone with expertise on all of the various ways that commercial loans can be structured, and which of those terms are negotiable. Too many borrowers focus only on interest rate, but a good commercial mortgage broker will help negotiate many other deal points, including maximum loan amount, the loan term, the amortization period, whether or not the loan is recourse or non-recourse, prepayment penalties, closing conditions, post-closing and or ongoing annual requirements such as inspections or financial reporting. There are many, many moving parts in a commercial mortgage transaction, and a good commercial mortgage broker will be able to help negotiate the best deals for their clients. Most likely, a commercial mortgage broker will be able to offer different choices and more loan options, which can make a huge difference in the borrower's cash flow. Most large real estate firms have in-house asset managers to handle commercial mortgage loans, but for individual investors and smaller real estate firms, they don't have full-time asset managers with the bandwidth to perform all of these duties on a full-time basis. And these investors are almost always going to be better served by hiring a competent commercial mortgage broker.